Hey guys, Greg here coming to you with another Fundrise video. Today's video is going to be talking about single-family rental homes. They're going to explain, Fundrise is going to explain the basis of them and what they mean and what they do for your portfolio in this article. Before we get started though, if you like what you see, please make sure to hit that like button. It really helps the YouTube algorithm and get this video more up towards the top of things. And if you do like what you see by the end of this, please make sure to hit that subscribe button. You get to see new videos as they come out from me. And make sure to check out that back catalog, because a lot of the things that I'm going to be explaining in this video with this article that Fundrise put out will kind of cover some things that I've already been talking about on this channel before, just with different acquisitions. Because a lot of them have been single-family rentals, just with various purchases that they made throughout for the interval fund that I'm a part of in my Fundrise account. So without further ado, we're just going to get started here about single-family rentals and how they're explained and things like that. So once upon a time, finding a single-family home to rent in the suburbs was pretty unusual. Families who couldn't afford a down payment on a home were locked out, or were folks who weren't ready to commit to a 30-year mortgage. And that's no longer the case. One of the hottest trends to emerge on the upheaval of the pandemic has been the rise of the single-family rental market. Just like I said, there's a lot of these in the interval fund and the different funds that are available on Fundrise, but we have seen a lot of them get added in onto the interval fund here in the past month or so, a couple months rather. We're not talking about existing homes leased out one at a time by small landlords. They're brand new homes. Large home builders are now building entire communities of homes for the sole purpose of renting them out. Investors are pouring billions of dollars into this sector. And you don't need to be a private equity investor or an overworked landlord to invest. At Fundrise, our platform offers a simple way for you to access these emerging mega trends. Homes are going up quickly. Tens of thousands of homes, although not soon enough, I would say, were built specifically to serve as rentals from 2020 to 2021, according to data cited by the Wall Street Journal earlier this year. The real estate consulting firm John Burns estimates that there are more than 200 companies, including ours, which is Fundrise, in the build-for-rent business, from money managers like BlackRock and JP Morgan to home builders like D.R. Horton and LGI Homes. Single-family rentals are essentially a whole new asset class, and renters aren't simply folks priced out of buying. They include millennials or empty nesters who might want to avoid the hassles of home ownership, and grandparents looking to live near their kids. City dwellers looking to dip their toe in suburban waters. Our renters are people who make great livings. They're at the early stages of forming their families, and what they really desire is a great school district and a great community. One home builder in Scottsdale, Arizona told the Wall Street Journal in their recent article on the explosion of single-family rentals. The rents for brand new homes in these developments, often decked out with amenities like granite countertops, stainless steel appliances, are typically higher than they'd be if you were renting out of an older home. And rents for single-family homes are rising overall, up 6.6% from 2020, according to a report by CoreLogic, a real estate data firm. From 2019 to 2020, rents went up just 1.7%. It becomes even more clear that single-family detached houses are the hot property if you look at the differences in rent increases between detached units, which are standalone homes, and attached units, so think like townhomes. Rents rose 9.2% in detached homes, while attached single-family units grew only 3.6%. So growth like this can signal a major opportunity if you understand how to approach it. So for them, this means location, location, location. The hottest spots for single-family rentals in the U.S. are generally clustered in the Sun Belt, or what we've been calling the Smile States, as you can see by this arc from Los Angeles to Orlando, encompassing fast-growing cities like Phoenix, Austin, and Atlanta along the way. And if you've been following my videos and stuff, you can see it in Texas and in Florida as well. They have a lot of different communities that they've been purchasing along the way. So single-family rentals rates increased at least 4% in all 12 of the Sun Belt locations that CoreLogic surveyed as part of its recent report. But this is a trend that predates the pandemic. These regions have been seeing their populations grow for the past decade compared to the Northeast and Midwest, according to the 2020 census numbers released in August. Phoenix has the fastest growing city in the country over the last decade, according to the Census Bureau. The city's population rose 11.2% to 1.6 million people last year. Single-family rents went up 14% in the Phoenix metro area, according to CoreLogic data. And as we can see in this chart here, single-family rent changes for select geographical areas. In those metro areas, the May 2021 single-family year-over-year rent and the April 2021 single-family median rent prices in this chart. Overall, and I'll hold that up for just another second or so, or you can just pause. Overall, 4 of the Sunbelt metro areas had single-family rental markets with rent gains of at least 10%, as you can see by this chart. So where do investors fit into this? The housing boom that grew out of the pandemic is showing signs of slowing down as the rush's more comfortable work-from-home housing is abating. But the single-family rental boom isn't going anywhere. Home builders are still putting up homes to rent, and the demand is there, especially with home prices so high. The choice to rent a home is far less fraught than whether or not to buy, and the rental market has always been less prone to boom-bust cycles. During the housing crash of 2008, for example, rent prices held relatively steady. If you look at rent data tracked in the Consumer Price Index, you'll see rent prices going up and to the right in a relatively smooth line. Home purchase prices, especially during the housing crash, have been much more volatile. This is a crucial concept for anyone thinking of real estate investing in 2021. It would seem like the simple way to take advantage of the rise in single-family rentals would be to buy a house in a Sunbelt city and rent it out. But how many people have the time to become a landlord, staying on top of ongoing maintenance, securing tenants, paying for insurance, etc.? I myself have been thinking about that. That's why I kind of went with Fundrise personally, just because I don't have to be a landlord. I can invest and get that money back in a fairly, I hate to say lazy way, because your money's going in there and it's just kind of working for you instead of you having to do all the work yourself. That was my mental thing there. So at Fundrise, we focus on investing in communities that are building homes or acquiring existing communities with the intent of using them to rent. Over the past year, that has meant successful deployment of our investors' capital into single-family investments all across the Sun Belt. By June, Fundrise had invested in the acquisition or development of 452 single-family rental units, representing about $79.2 million. That same month, we got financial backing from Goldman Sachs, a $300 million credit facility that will allow us to scale up our investments in single-family rentals even more. The investment bank's move is a signal of just how big this trend is becoming on Wall Street. Beyond those existing investments, through a combination of new homes under contract and our development projects, we aim to scale up the portfolio to nearly 2,800 homes for lease in 12 markets over the next 21 months, following deployments as shown here. I wish I could make that a little bit bigger for you here, but it looks like $582 million is the estimate investment amount with 2,344 homes under contract. And you can see this big area here in Dallas, Tampa, and Orlando being that smaller one, all the way up to DC and all the way over to Phoenix. For decades, the main way to tap into the returns in the single-family home market was to buy a house, and millions of Americans were simply unable to do that. Now, we're saying you can invest in housing without becoming a landlord or even a homeowner, and thanks to the increase in single-family homes, you can live in the kind of home previously unavailable to millions. It's a powerful change. So what do you guys think of that? Do you agree with this concept of big companies like Fundrise buying up essentially their own development and renting out all the houses and not really having, renting instead of people having their own equity in it and going to, like us, the shareholders? Let me know what you think down below. Like I said before, if you like what you see, please make sure to hit that thumbs up button. It really does help the YouTube algorithm. And if you did enjoy this, please make sure to hit the subscribe button and that little bell. It really does make a huge difference. And if you're interested, make sure to go back into my catalog, see some of these single-family rental developments that they have been buying up in the Sun Belt and kind of see what you think of those. Also have some apartments in there, but the main focus on this is those single-family homes. Again, go back and see that back catalog of what I have. And again, if you like what you see, make sure to hit subscribe. We'll talk to you next time, guys. Take care.